kind of give you an overview of the 2015 health insurance marketplace. So the reason I picked this topic was because when I quit my job, start the bootcamp, you're no longer covered by your employer's health insurance. So I think Yannick asked one time is what we're doing for our health insurance. So this is kind of what I want to dig a little bit into to see what are the options out there on the marketplace. So by definition, marketplace, it is pretty much a online shopping mall where you can see the coverage of different provider, carrier, and you can pick and choose what is your best option and how much money you want to spend. And I'm sure everyone here has heard the term ObamaCare. That is also called the Affordable Care Act that started of March of 2010. And starting of 1/1/2015, it has been fully implemented in the US. Just a quick overview of the dataset. The dataset was hosted by the Center of Medicare and Medicaid Services. And for the analysis purpose, I'm only using the 2015 fiscal year data and focusing on the individual premium. So I'm not looking at any family plans. If you have kids or dependent, you're buying a plan for all of them, that's not gonna be here. So I'm targeting the singles here. So on the top of the slides, it's a map of the median monthly premium distribution by the state. So the darker the color is, the more expensive it is in that state. So New Jersey here, pretty small on that corner, is pretty expensive, same as Wisconsin, Wyoming. And the lighter pink color, like Nebraska, Iowa, Missouri, those are cheaper states. You can notice some white space of the state, like California, New York. Those are actually state-based marketplace, which means they don't participate in the federal healthcare arena. So unfortunately, New York has its own. So for the residents of New York, this one might not apply to all the residents of New York, but you can still get an overview of the state level, of the federal level. So looking at this graph, I have a question. What are some of the factors that may affect the premium? By the assumption that I know, so the more coverage you get from an insurance, the more money you are gonna pay. That's the first possible solution. That's your plan coverage. And the second possibility is the older you are, the higher premium is gonna charge you, right? And the third one is if you're a state of resident, let's say New Jersey, are you bound to pay more than another resident of the state of Iowa? So those are three of my questions I wanna target for this presentation. So let's move on to the plan coverage. Under ObamaCare, luckily, all the plans that being offered out there on the market is ranked by a metal level. So as you can see on the bottom, I kinda put a note on there. It says high and low are for dental insurance only. Those are these two right here. Other than that are all medical coverages. I know the labels are pretty small. So this one is the most comprehensive, the platinum coverages, and the silver, gold, bronze, catastrophic. So this is the best coverage you can get out there in the market. So you're paying more in average. This 50 percentile, the red dot here on every box is actually the mean for that particular coverage. The catastrophic, you have the lowest premium, but you can see the spread is actually smaller too for that box. So yes, it confirms my assumption that plan coverage affects the premium, as you can see in the box chart. So moving on to the next question, whether the age group affects the premium level. So here is a graph by age. That's the average premium by coverage on the y-axis. So again, the horizontal one is dental insurance, which we can ignore pretty much. And then here are all the medical coverages. The top one is the best coverage, the most comprehensive one. The bottom one is you cover the worst scenario ever, like car accident, whatever. So here, there are two interesting findings here. If in the age of, this is 21 to 25-ish, you're actually paying almost the same amount for no matter you're 21 or 25. But starting of year 43, your marginal rate of increase actually pick up. So every year you grow, you're actually paying a lot more than you used to. So something to notice. And the other thing is, the older you get, you actually paying a lot more. The spread get wider. So you're paying a lot more for a better coverage than you used to. Because before that, everything kind of parallel. Now you're spreading out. So trade-off there. So yes, again, it confirms my theory that age group affects premium, and you know where the turning point is and how it's going to spread out. And the third, I want to evaluate whether your state of residency would affect your premium level. So there are two possible reasons behind it. Is because, let's say you're in the state of New Jersey, and you only have 10 plans to choose from. So you don't have that many options out there. That's why you're paying a lot more. So you don't have the economy of scale. Or New Jersey, in general, for every single plan out there, it's actually more expensive than any other state. So I'm going to try to figure out the first question first, because it's easier. This is a graph ranked by number of plans available per state. So Wisconsin, Texas, Florida are the ones that offers 800 plans out there. 800 means there are 800 different plans that was tailored to the need of the population. And then West Virginia is the least, probably 80 plans available in the marketplace. I know the labels are kind of small, but I'll try to speak clearly. So the color means number of carriers. That is number of insurance companies that are actively participating in the market. So let's say United Health Group, they can come up with 20 or 50 plans in a state. They can offer very comprehensive or very minimum coverage plans, but those are under one entity, so that's one carrier by count. So as you can see, this graph kind of shows you the more carrier you have in that state, the more plans available for purchase too. So those two go hand in hand together. So next is, you kind of wonder, if we have more plan to choose from, more carrier participating in that state, would that make the price lower because the competition is more heated, right? So here you can see, even if you're in the state of West Virginia, where you have only probably 10 participating insurance company, the distribution is pretty much similar as a most active state. So the conclusion is the active market players in the state is not a deciding factor for the premium level. So that makes me wonder whether there is more expensive state out there. So here I'm looking at the barrier of entry, the minimum premium, the average minimum premium of a state. So, and it's ranked Alaska, Wyoming, New Jersey are a high barrier to entry. So per state kind of regulate their own DOI, that's Department of Insurance. So they ask for a minimum premium amount for you to enter that market, which means these states are very expensive to go into in the first place. And Arizona, PA, Texas, those are kind of moderate, lower barrier to entry. So you can, from this graph, I kind of ask myself, the lower premium, average premium, is it because it is the premium is lowering every single plan they have, or is it because you have 5 different metal plans you can buy, or if it's the combination of those plans play a role? Because you're using minimum plan of one type times number of plans in that state available. So here, I'm actually sacrificing the x-axis for you guys. This is the same layout as the previous slides. They're ranked from the most expensive barrier of entry state to the least. These are colors are by 5 different plans out there. But you can see the trend is the same for every state, which means in average, Alaska And all those states on the right are more expensive to enter in every single type of plans out there. So it's not like the percentage of participants in that state. It's actually every single unit price on that policy is more expensive. So, okay, the very last one is for you guys. I kind of play around just for all my leisure time. So are you spending too much on your insurance? I am using the gold plan rate. That's most of the employer provided plans out there. So that's, on the left side is a true histogram of all the prices out there. On the right side, I'm using a take a log as today class of transformation, where you use a transformation on your first individual rate. And you take a log, and I've used the maximum likelihood estimate to fit a gamma distribution on the parameters. So on the right line there is actually using the parameters that was fitted and running 1 million of iteration. So from that, if you give me a price, you're saying I'm paying $500 per month right now, I can pretty much tell you using this red line, like what is your percent out there in the market. My conclusion, yes, plan coverage type affects the premium, age group does too, and then your state residency does too. So if you're a state of resident of Wisconsin, you're bounded to pay more on every single type of plan out there. That's it. Oh, yeah.
So have you plot the price versus number of plans available in a particular state? You were just telling, but I did not see any graph. Where is the price and number of plans available in a particular state? Because that's directly linked to how much competition is that in particular state.
So you're saying the x-axis is the number of plans
available, and y-axis price and different state companies.
I did look at the mean and median, like the premium by state. It actually pretty much in line with the minimum premium of that state. So part of the reason I want to talk about it is because the insurance industry is not regulated by the federal government. This is actually called statutory reporting, which is regulated by every single state. So the state government has the authority to come up with a law or any regulation they want to implement on the marketplace of the particular state. So for a state like that, Alaska or Wyoming, they just, you can think of the box plot. They just move everything up a little bit, so your minimum of the entry is higher than anyone. But that, if you look at the minimum premium, I think is telling a better story than looking at the mean or median of that state. So this one actually tells you more of a regulatory environment of a particular state. Yeah, what might come. So the data field, to price a health insurance, you probably have close to 100 different factors that come in play. So we're using premium as one of the thing to kind of like give you the price, what coverage you want. But if I go back to the box plot here, if I can, by coverage. As you can see, there's a lot of outliers on top of gold. But you're thinking like, if I'm paying $2,000 per month for a premium on this, why don't I get a better coverage on the platinum? The answer is every plan is designed to tailor a certain need. So you can have insurance that doesn't allow you to see out-network doctors at all. That's why you're still qualify for this one because your copay is, I don't know, 20%. But you're limited to see your network. Or there are certain plans you can't have any pre-existing condition. You can't have a heart problem before. So if you have any pre-existing condition, you are pretty much bounded to pay more on that monthly premium. So there are a lot of factors come into play, like tax credit, HSA saving account, those kind of things. So if I have more time, there are a lot of dimensions I want to slice and dice on this. But for informative kind of, because we're talking about this topic before, during the time of the bootcamp, what should we be covered? This is, if you're under 26 or so, get on your parents' plan if you can, because they extended the age to 26 now. If you can't, get on the catastrophic minimum. So it covers like ambulance costs or emergency rooms at least. But yeah,